Recently, one of our viewers in this channel asked me a question: where should she invest her liquid money for a few months? In this video, I'm going to explain some of the options that you have at the recording of this video in July 2024. So the first option is your savings account. In Canada, we have typically two types of savings account, which is typically the regular savings account, and the other one is high interest savings account. Each bank offers the high interest savings account, and these are the best rate that is available as of July 2024. So this is an article from MoneySense. I love MoneySense. MoneySense is a wonderful website for anybody who wants to learn about personal finance. And this website has summarized, gathered all the available interest at this point. Now, I'm recording this video on the 7th July of 2024. And as you know, these rates changes all the time because whenever the bank needs cash, they increase the interest rate for these rates. So what happens is savers typically save their money in that bank, and that's how the bank gets their liquid money where they can lend out to the borrower. Now, these are rates from both the big box banks like the physical location bank and some online banks. If you can see here, these list include Equibank, Motive, Savvy, Savings Account, a Wealthsimple Cash, Vulcan Financial. So these are the top one, but I want you to highlight on this section of the website where it listed all these available options. You can see from the Equibank, you have the Scotia Momentum Plus. So I can see that among all the big banks, Scotiabank at this point is offering the highest interest rate of 6.05. But one of the challenges that investors or savers typically have is oftentimes these big banks gives promotional interest rate for 90 days and 120 days. At max, I have seen 6 months, but most of the time these promotional rates are for 90 to 120 days. And this is sometimes frustrating for savers because they have to take their money and shop around once the promotional period expires. Other big banks, like if you can see, Wealthsimple Cash has something around 4 to 5%. Tangerine is typically a bank where it always gives higher interest rate among all the big banks. If you are comfortable dealing somebody online and you don't want a physical location, Tangerine is not a bad option. Some of the lesser known companies like Maxa, I haven't heard about these companies before, but they are also giving rates. But I will be hesitant to put my own money in these lesser known companies. I would put more of my money to bigger companies like Scotiabank or Tangerine or Simple Cash or Equibank is also quite large. These are the available interest rate at this point. The number two option is Guaranteed Investment Certificate, or also known as GIC. So GICs are a type of investment where you give these money to the financial institution and they issue a certificate which can be redeemable or non-redeemable. So the redeemable certificates are basically these are available to you all the time, meaning that whenever you need the money, you can just go back to the bank and they will give you the money back. And the way the interest calculation will happen is they will calculate the days that you hold that GIC and they will give you the money back plus the interest for those days. So for example, if you're buying a 1-year cashable GIC and you are holding that GIC for 90 days, whenever you are cashing it out, the bank will just give you 90 days of interest plus your principal amount. The other type of GIC which is available is something called a non-redeemable GIC. So as you can guess from the term non-redeemable, it means that the money is locked for that period of time. You are not able to redeem that amount, meaning that you are not able to cash out that amount before the maturity of that date. So if you're buying a 2-year GIC, this money is locked for 2 years. If you're buying a 5-year GIC, that money is locked for 5 years. Now again, I'm back to the MoneySense website. They have listed few GICs rate available at this point. I'm recording this video as of July 7th. This website has listed all the available GICs. So as you can see, these are sponsored GIC rates. That's why they're at the top. But you can sort this by selecting the type of account that you want to buy. And then if you go down a little bit, you can see all the frequently asked questions about GICs. And these are basically the highest GIC rates in Canada as of today. You can see the top one is Achieva Financial. I believe this is a smaller financial institution. I've never heard about this one. Then you have the big banks over here. If you are locking your money for a longer period of time, you are typically supposed to get a better return, meaning that you are supposed to get a higher rate of return for locking your money in a longer term GIC. But because we are in an unusual situation, and you probably heard about this term, inverted yield curve, in the newspaper or in television, what it means is the shorter term GICs are giving you higher interest rate than the longer term GIC. This is because of the inverted yield curve, or sometimes it's called negative yield curve. Basically, if you think about in an intuitive sense, if you are giving a loan to somebody for a shorter period of time, typically it carries less risk because you are going to get that money quickly and there is less likelihood of defaulting that loan. But if you are giving that same money to a longer term period, meaning that you are giving that money to somebody else for 5 years or 10 years, this typically has more risk compared to a 1 year term. Now, because we are in an unusual situation, as I said, and this is why a lot of economists are talking about recession, and this is one of the most trusted indicator that when in an economy, the shorter term GIC loans are giving you higher interest rate than longer term GICs. It's an indication that we are heading towards a recession. And if you are a saver and if you're an investor, you are going to get a better rate if you are locking your money at, let's say, 1%. So this is your 1 year GIC, non-redeemable. This is your 2 year GIC, 3 year GIC, 4 years, 5 years. As you can see from the various number, normally they are pretty because each bank is looking at somebody else's rate. So they don't want to be too off. So they want to be similar. But if you notice that RBC across the board has the lowest rate because RBC need that much cash. So they offer lower interest rate to their customer. And typically the online banks who are struggling with cash offer the highest rate. So companies like Tangerine, they will offer you the highest rate of return because normally these banks don't have that much liquid cash. And that's why they're offering higher interest rate to savers or investors so that they can take that money and lend it out a different purpose like mortgages or a business loan, something like that. So bigger institutions offers lower interest rate and digital banks offers you higher interest rate. And if you go down a little bit here, it explains all the different kinds of GICs that are available. But in general, GICs are typically categorized by two criteria. One is redeemable, one is non-redeemable. You can see here cashable GIC, which is like the redeemable one. If you can expand a little bit, it explains you all the details of these. But in general, GICs are good for purposes like if you are saving to buy a down payment for a house or something that you need in the next couple of years, a GIC would be the better solution alongside with the high interest savings account. And some other type of GICs that are available, which you might not see pretty often, is market link GIC. So these are also guaranteed, meaning that the principal amount that you are giving to the bank guaranteed for the term. However, the performance may or may not be guaranteed, and that's why it's market linked. It is based on some performance of something else. A lot of time, these market linked GIs are linked with the performance of the stock market, It can be linked with the performance of the bond market. So each issuer or each market link has its different payout structure. So you gotta look at the details of that. I have seen a lot of time where market link GICs were sold pretty wrongly, and I would caution you that whoever you are dealing with, the advisor and the branch, make sure you are understanding it properly, because this is the area where a lot of people don't understand what they're, and advisor take advantage of that and sell them product that they shouldn't sell. And then there is foreign currency linked GIC, which I never seen. Like if you have lots of US dollar cash and you want to park that, this is probably the only use cases. But typically, if you need the money within 1 year, I would say go for a cashable GIC, which is redeemable. If you need the money in 2 to 3 years, maybe GIC for a better rate. The redeemable GIC will always have a lower interest rate than a non-redeemable GIC. It's because the non-redeemable GIC will be more sticky to the bank, and bank is going to give you more interest rate. So if you want to learn more about this, check out this article from Money Sense. They have a video, so watch that and make sure to shop around for the best rate. The third option would be investing in something called a high interest savings account ETF. So those who are familiar with investing in the stock market through a discount brokerage, this is probably most suitable for you. So high interest savings account ETF is basically product which is mimicking the performance of a high interest savings account at the big banks. So different providers have launched product which are basically going to act like as if you are parking your cash in these product. One of the drawback of investing in a high interest savings account ETF is you need to understand how to buy a stock or ETF yourself through a discount brokerage, and there will be nobody to help you to buy this product. So you need to take action yourself, and you need to know how to buy ETF through an online broker. Now, some online broker offers free trading services like Wealthsimple or National Bank, meaning that whenever you are buying an ETF or selling that ETF, you don't have to pay any commission to the discount brokerage. So that's a plus sign. But if you are investing through some other platform like Questrade doesn't charge you when you buy that ETF, but charges you when you sell that ETF, or some other brokerage like TD Direct Investing or RBC Direct Investing, they will charge you $10 to buy that ETF, and whenever you are selling that, they will charge you $10 to sell that ETF. So if you have a smaller amount to park, this trading commission might be a substantial number for you. Now let's take a look at what are the available ETF option in this space. So I again going back to the Money Sense website, these numbers are updated as of May 23rd. So ETF rates is going to change every day based on the underlying products. So by the time you are looking at this, you might see a different number, but these are the available rates that we have as of July 2024. So if you scroll down a little bit, it will explain you the structure, how it is regulated. These ETFs are not CDIC insured, meaning that when you are saving your money at the bank, typically those are insured up to a certain amount depending on which account type you use. But these ETFs, they don't have that coverage, so this is a warning sign. Also, sometimes the regulators have said that there are too much money in this space that are liquid, and there might be a liquidity event that might happen if there are a significant withdrawal from a lot of investors. But for average investors, that might not be too big of a risk. But the benefit of this product is you can buy and sell whenever you want. So whenever you need the money, you can just go to your brokerage account and sell it and get the money the next business day. As of today, there are 4 cash type ETF that is available. One is from Horizon, BMO, Purpose, and Cash. So as you can see, these ETF has a management expense ratio. So this is the cost of owning this fund, very similar to any type of ETF that you might be investing. And then it will explain you where this money is investing. The cash ETF, the bottom one, which is from the Horizon, they invest their money at Schedule 1 bank, currently yielding 4.8%, and this is the size of the fund. So this is some alternative option for those who want to buy ETF and you don't want to go to the bank. You can just buy from your brokerage account or your online account. The only concern is you need to know how to buy it and where to sell it. So that's something that you need to understand. But the benefit of this product is you don't have to go bank to bank when those promotional rates are expired. So this is something that a lot of people like, that you just get the rate based on the underlying product. So I hope it gave you some perspective what are the options that you have to park your cash in 2024. Usually, we recommend you to invest in liquid funds whenever you need the money within the next 3 years. If you have money and you want to invest in the stock market, typically the minimum time horizon you need is 3 to 5 years. If you are working with an advisor and the advisor is typically very aggressive, they probably will say that you need to have at least 3 year time horizon. But most reputable financial planners wants to see that you don't need the money for at least 5 years before they will invest that money in the stock market, because stock market goes through cycles. We don't exactly know when the market will be up or down, so we need to see at least 5 year timeline where you don't need the money, and only then we should recommend you to invest that money in the stock market. But if you need the money for your down payment, for your wedding, for your gift, any other large expense, and you need that money within the next 3 years, make sure you are parking your cash in something predictable. So these are predictable investment option, your high interest savings account at the bank, or your GICs at the bank, or your high interest savings ETF from a discount brokerage. If you are doing discount brokerage, you probably will also be able to get option to buy GIC through your online discount brokerage. So that's also an option. But in any case, make sure less than 3 years timeline, do not invest in the stock market. Thank you so much again for watching this video. And if you have any further question, leave that in the comment section. Send us email with your question, and we would like to make a video in the future for you.